According to supply managers in the 9 MidAmerica states, how is the economy performing?
Our survey of supply managers in manufacturing for the 9-state region, the overall index was down, and down significantly, but still above growth neutral. The overall index dropped to 52.8, and that's from January's reading of 57.2. Now I'll bring up a graph that shows the comparison between the U.S. number and our Mid-American number. As you can see, the number has been moving lower both for the U.S. and for the region, pointing to slower growth but still positive growth. Now the U.S. number bounced significantly below growth neutral over the last couple of months. Ours has been a bit higher. I expect that to continue, but the coronavirus, we'll have to see what happens in terms of the impacts there.
What were the hiring trends?
Hiring was down significantly. The hiring has been somewhat problematic. Of course, a lot of that we can trace to very low unemployment rates, but also, the ability to find and hire qualified workers is a big issue, but also slower growth.
What impact is inflation having?
It's still in a modest range, but I'll say it's pointing to validating the Fed's position of not moving on interest rates. So it's in a range, not much concern there.
What is the impact of coronavirus on the economy thus far?
We asked the supply managers, and these are again men and women that are buying goods from abroad in many cases and domestically. And of course they're buying it to process for sales later on. 4 out of 10, 40% of the supply managers indicated negative impacts from the coronavirus, and that's a real concern for the regional economy going forward. We asked about 27% said they'd switch vendors, actual switch vendors because of the coronavirus. So that's a real concern if this coronavirus if we do see that in the U.S. popping up, and more than what we've seen thus far, because China, of course, is the supply managers buy from China. If you're buying from there, you're much more reluctant to go to China to search for goods and raw materials and supplies. So that's where we're seeing the impact. We saw as many as about the same number that are switching vendors, and switching in some cases to domestic vendors. That's a good thing, but the supply chain is where we're going to see and where we are seeing the early impacts of any coronavirus, and we'll have to wait and see what's going to happen there. The Federal Reserve is, in my judgment, is probably going to reduce interest rates. Not as much of an impact there. We need lower interest rates. We need a vaccine. Would certainly be much more welcome than lower interest rates, but lower interest rate and a coordinated effort of the People's Bank of China, the European Central Bank, the Bank of Japan, and our own Fed moving to lower interest rates. So for consumers out there and for businesses, lower interest rates. Lower interest rates on the long end now at the lowest they've been in 60 years. 60 years we're tracking and the reason is safe haven buying. We're seeing businesses, individuals, investors looking for safety. Safety is the number one concern right now, not the rate of return. So where do you go for safety? Gold. Gold prices are up. Where else do you go for safety? U.S. Treasury bonds, pushing up prices and yields down. So that's what we're seeing right now from the coronavirus.
What does the MidAmerica economy need in 2020?
It's been somewhat the same, and it remains the same, although we've moved it up now. I'll move one factor up, coronavirus. We need to see that resolution, and what that means is no more spreading, having that coronavirus contained. That is the number one issue. Second, it's always remains finding and hiring qualified workers. We need to see trade peace. Now we are going to see nations being much more agreeable to trade, but then there's the issue of individuals going to cement deals. I mean, travel is being hit, and are we going to see supply managers going to China, going to South Korea, going to Canada, moving to buy raw materials and supplies? That's a big issue. We need that. We need trade peace. We need a weaker U.S. dollar. we're likely to see a stronger U.S. dollar. There's always, again, this is globally, this is a flee to safety. And as much as we criticize our own economy, ours is the best economy on the face of the globe right now, the U.S. economy. And so we need to see that, and that's the real concern going forward.
What are some areas of risk that we need to monitor?
Real important, of course, is the containment of coronavirus, but also some others. Boeing aircraft, for example, a big exporter of goods, and that's having some negative impacts. Boeing is stuck in reverse, it seems like right now. So watch what happens with Boeing going forward. Look at the yield on the 10-year Treasury. That is probably the number one metric to keep an eye on, the number one thing to keep an eye on. Gold prices also, but the 10-year yield, that's moved again to the lowest level in 60 years. So that's quite astounding, just showing a high level of risk and risk aversion moving to safety. Jobs report comes out this Friday, March the 6th. That's going to be a very important reading. Are we going to see impacts from the coronavirus? I think it's a bit too early to see the jobs impacts. We need to come in about 170, 180,000 jobs. I think it's going to be lower, but still in a range that we can accept. Wage number coming in on the same report, and that's Friday, March the 6th. Great wage number should be, we'd like to see year-over-year growth above 3, closer to 4%. I think it's going to be tough. It'll come in around 3%. Finally, retail sales. I mean, we don't talk about that much here. It's a very important number. It comes out March the 17th, a little bit later. Retail sales, and that's the month for January. February numbers are going to be even much more closely watched. Those will come out in the April. What happens to the U.S. consumer? Does he or she remain at home and shop online? What about going out to bricks and mortars? It's going to be very important, a very big concern. So watch any signal of retail sales going forward. And of course, keep an eye on the stock market. And if you're invested in the market, it's too, I won't say it's too late to get out, but I wouldn't be getting out right now. Long term, it's still a good place to invest, but we're going to probably see some lower numbers in the stock market, but it'll come back.